trading at any given point in time for any retailer like you and me, right? We assume that the market is filled up with infinite random reasons as to why it's going up or down. And when you copy trade that person, you have just added another layer of infinite variables. Again, that's random, that could affect your capital.
Would have, could have, should have. There's no meaning to all these thought processes. In fact, by having any of these thought processes, it would just, again, manifest itself in many ugly ways, like revenge trading, mess up your psychology.
People revenge trade because you're looking at it from such a short-term perspective, like I had to get it back today. But hey man, like tomorrow's market's still gonna be here, right? It's gonna be here for like a long time. What's the rush?
I like to find pairs that I can storytell, swap some liquidity here, this, that. So the bare minimum is I'm able to storytell what actually happened. Hi guys, welcome back to another episode of us reacting to Reddit reviews. So my name's Juan. I'm the co-founder of TradeX Prop, and this is Brian, who's first time on camera. So Brian, can you introduce a little bit of yourself?
Alright, thanks Juan. Hey guys, my name is Brian, also known as Hitori. You may have recognized my voice because currently I'm also still doing the weekly market outlooks with TradeX Prop as their market analyst. I'm very happy to be here today to be able to do this Reddit React video with them.
Alright, cool. So without wasting any time, let's go to the title of this Reddit review. So this is under the day trading category, and it's titled Where to Go From Here. Okay, so we go to the first segment. Okay, so first segment goes like this. A brief introduction. First of all, I need to say where I've gone wrong and why. At the very start, I cannot even remember why I looked into crypto. Must have been an Instagram reel or something. Anyways, I signed up to eToro and placed my first trade without knowing anything about the market or even seeing a candlestick chart. Within 2 days, my trade of £50 was up £2. This seemed too easy to me. For a little bit of extra information, around a year prior to this, I did in fact see an Instagram reel talking about an app called Involio. In this app, profitable traders can share their trades, and as a user, you can copy their trades for yourself. If you find a good trader, you can be lined up to make a small fortune without any knowledge of trading. Okay, any commentary thus far?
Seems like a very, I'd say, normal story, right? Starting off, I think tons of people have been through the same thing. Not even knowing what a typical candlestick is supposed to mean or do. They just get straight into the app and then they learn into the execution part of it, right? Just buying and selling. So I think that's something that I have also been through myself. Have you been through it?
Yeah, definitely. That's how I started out. That's how I also learned that this is not really the right way to go. And for me, when I see this segment, basically this guy, he's just seen reels and immediately decided to jump into it. I would say that it's not an ideal starting point because there's no due diligence done whatsoever. I think he should have put in a little bit more effort. But then again, as you've just started out, so I guess it's okay. Anyways, soon after seeing this free $2 into my account, £2 into this account, I jumped into the App Store and downloaded Involio, still not knowing anything about trading. The first days of using it were exhilarating. I was placing trades on a platform called Maxi with £200 in my account and risking £24-ish per trade. I loved watching the free money roll in, and I was now addicted, sitting at the end of my bed waiting for one of my carefully handpicked traders to tell me and the rest of their followers the trade they were in. Somehow throughout the days, I always ended on break even or close to it. This, however, did not demotivate me. I was still excited each morning to place more trades. This sounds like a very slippery, dangerous slope.
Yeah, because like when you first start off, right, when you win a trade, for no reason, it feels like so easy, right? And you get excited because you're right. When you win money, you're right. Technically speaking, you are correct, but you don't know why you are correct. And it feels fun. It's like a game, which is something nowadays that is portrayed online. Many of these trading platforms, they look like a game, right? They have a beautiful UI, they look clean, they look good, and all you're doing is clicking the button, right? So I've been through the same thing. I've taken trades that played out well without even knowing why they played out, and it was fun, you know. So yeah.
Okay. when I look at this, what we could see is that he's actually copy trading, right?
Oh yeah.
So he's copy trading, and what we could see is he's risking $24 per trade, which is more than
Wow.
10% of each trade is risking 20%, 10% more than 10% of his account. So which means that if he had just 10 trades, losing streak, less than 10, his account would be gone.
Yep.
And this is one of the, I feel, the pitfalls of copy trading, a trader, because that trader, he may have his own risk to reward ratio,
Yep.
his own hit rate. So it may be, when you look at the copy trade, he may be profitable over time, right? And perhaps he's able to absorb losses like this because maybe he risked very low. So maybe let's say if he was risking only 1% and he had a streak of 10 losses,
Yeah.
that would only mean that he's down only 10%, and he had 90 more percent to play with, right?
Yeah.
So, for example, if a trader had a low hit rate but a very high risk to reward, right, ratio, so it could be that he's just waiting for that one trade that could cover all of these small losses.
Yep.
And over time, he'll still be profitable, right? But if you, as a copy trader, you're copying him, you're not knowing what's his game plan or how he does things, then the problem is that you may just end up risking the entirety of your capital, and just so happen that it may just be on that specific trader's losing streak.
Yep.
And you'll never actually get to the profitable part because you're not around, you're not able to stick around long enough.
Correct.
So that is one of the pitfalls of copy trading.
Yeah.
And you really need to understand. So you can't just copy trade without any game plan either. So you need to have a basic understanding.
Yeah, that's crazy. You know, adding on to what Juan has said, basically trading at any given point in time for any retailer like you and me, right? We assume that the market is filled up with infinite random reasons as to why it's going up or down. When you copy trade someone that you don't know and has no long-term track record for like 3, 4, 5 years minimum, right? You don't know what their performance is. And when you copy trade that person, you have just added another layer of infinite variables. Again, that's random, that could affect your capital.
Yep.
Yeah, so that's something that people should understand when they're copy trading someone they have only seen for maybe 3, 4 months, maybe even weeks or even days.
Yep.
I don't think, from my experience, when we go onto these platforms like eToro, for example, all the traders there, most of them at least, they don't have a long-term track record more than like a few months. They're only there for like 4 or 5 months, and then that's about it. That's their track record in a sense, and I don't think that's long enough.
Okay, I think in a nutshell, I think to if you really want to get into copy trading, you need to do a bit of due diligence.
Yep.
Find a trader that's been around for quite a while, at least I think 1 to 2 years. Show that you have a longevity and you are profitable over time.
Yep.
And then understand how the trader trades, if that's possible. Like look at his max drawdowns, his trade frequencies. I'm not sure what other metrics you can see. Can you actually see hit rates and all that?
Depends on the platform, like.
Okay.
Yeah.
Okay.
But yeah, you can see the win rates, the losing trades, all
Yeah,
those,
so-
those metrics.
Yeah, just do your due diligence.
Do your research, everyone.
Yep.
Let's get it.
Okay, so on to the third segment. So the first crash, eventually, I hit my first big loss, negative 40 pounds, and it hurt to see. So my head was on the bed, I was losing all hope, looking away from the screen, unable to watch it happen as my SL got hit. I've had enough of trading that day. Miraculously, I bounced back hard the next day, not only covering the losses of the previous day, but also making extra 60 pounds on top. Though all this money was made within hours, I did not feel anything. I was already losing the concept of money and just seeing it as this challenge on my computer, growing this number as big as possible. Using terminology some may be familiar with, I was in consolidation, I was breaking even, no more, no less. Okay.
That kind of ties into the fact that he has detached himself from the fact that the numbers on the screens, they're real money. It's real hard cash, right? But just on the screen, you can't feel it, you can't see it, right? Or touch it.
Yep, and that's dangerous. That's dangerous. The problem with this is when you just focus on the bottom line, on the outcome. Normally, what happens is you just focus on growing just that money and disregarding the process, right? You're looking at the outcome rather than the process that you should be focusing on that can produce the outcome.
Yep.
Now you just focus on the outcome. So normally what happens is that when you do that, it can manifest its ugly head in many ways. So for example, revenge trading.
Yeah.
Because you just focus on the bottom line, right? So if you lost some money and you don't understand that that's just part of the process, but it makes you feel like you need to double down or suddenly get back into the market to win it back. You know, if you have this mindset of winning it back from the market, then it's problematic. You only focus on the outcome, but not the process. You should be focused first and foremost on the process, because the outcome will be a byproduct of this process that you've created. Right?
Right? It's like you have to go through the process, which takes time. And many new traders, they don't realize that time is the most important aspect of you being in the markets. How long you've been in the markets and what you do with that time is important. People revenge trade because they're looking at it from such a short-term perspective, like I have to get it back today. But hey man, like tomorrow's market's still gonna be here, right? It's gonna be here for like a long time. What's the rush, you know? And this guy actually didn't revenge trade too much. He stepped away after that, that loss for that day, which is a good thing. It's a really good thing.
That's the only positive part of this, is that he hit his SL and he looked away from the screen. So that's a positive thing.
Yeah.
But okay, so let's move on to the fourth segment. After many more weeks, the promised land flashed in front of me. Everyone on Involio was talking about a bull run, an opportunity to make millionaires from nothing. And I was in on this early, or so he thought lah.
Yep.
So no way I was gonna miss out. I added £1,000 into my account, thinking this was it. I'm going to 100x it. Side note, I also added another £700 from a meme coin I thought was going to 10x my money, but this is a whole new story for another time. Okay. So although it's a whole new story, but actually there's a common theme. Common theme is this guy is looking for quick cash.
Yep.
And that's just not really gonna work, right? And also when you say everybody's talking about the bull run, it does not, that's not something that you should be basing your trade decisions on. Especially when it's just some people on a platform talking about it's gonna do this, gonna do that. The market will move regardless of what people say on that platform.
Yeah, something that someone told me a while back is to add on to your points is that if someone is talking about it on an online forum, it's probably already too late, and it's probably not a good time to get involved in something because it's like widely known there's no benefits to its hidden advantage anymore.
Yeah. It's already the advantage has expired by that, right? And also, if we even assume that the person talking about it is legitly presenting an opportunity for you or himself, right? Let's say you create a meme coin, and you can hype it up in any forums, right? But no one knows that you're the owner. So so always do your due diligence.
Don't let your bias or conviction take over your judgment, because it could always just be a sign of desperation. That's all.
Yes. Okay, let's go on to the fifth segment.
All right.
So the last crash, once again, with a trader who was making a consistent 100 to 200% profits per trade. Okay, so now he's gone on to another trader. He copied this next trader and two more. There were swing trades, multi-day trades, and I watched them slowly go down, and 10% go down, 15 and 25. They never once saw profit, just crept lower and lower till the SL that he placed. Somehow, even to this day, I do not feel any emotion for losing all this money. I could be writing this very text on a brand new MacBook Air from what I lost, but instead I'm here down 50% on an account, scared to make any more trades, listening to the fans on this old laptop as if they are taunting me. It's now the end of May. It's been an interesting journey, and I definitely have not talked about all the ups and downs. But I'm currently in a bit of rut.
Wow, 100% to 200%
Profits per trade.
per trade. Wow.
So that's the thing. When you say consistent, what do you mean by consistent? Consistent within the last 2 months, 3 months, right? So this definition of consistency is it varies from person to person, but overall, the longer the period they've been in the market and they're profitable over time, that's the traders that you want to follow. And because they are profitable over time, then you would also need to make sure that you would also need to be in the market over time, sustain following that trader over time, because if you over risking and you're out, so it does not matter that that trader is profitable over time, but if you can't even, your capital can't sustain that journey together with that trader, you're not going to be reaping the same results. So yeah,
it's more so like if you can't survive long enough, your edge, whether or not
that
it's your
trader's
own,
edge,
that trader's edge, your edge, it won't have time to play out.
you won't have time to
Yeah.
manifest. Definitely, you're out within 10 trades.
How can you
Yeah.
track your performance? Like the market's gonna be here for like a long time, right? So why are you rushing into things and trying to make it big in the next trade or the next 3 trades, even your next 100 trades, right? You shouldn't be looking for that
Yes.
home run, right?
Yep.
So you're supposed to take it slow because trading is a very slow game.
Yep. So then there's another problem here is that, you know, I could be. There's this mindset of what if I should have, could have. It's never gonna be doing you any good if you plan to be a serious trader.
Yeah.
Would have, could have, should have.
Yep.
There's no meaning to all these thought processes. In fact, by having any of these thought processes, it would just again manifest itself in many ugly ways, like revenge trading, mess up your psychology, burnout, and, you know, a lot of things. But then again, over here, he mentioned that somehow he does not feel any emotion from losing all this money. Okay, so my take on this emotional detachment is that it can be good if you've already established a proper trading system, right? You've back tested, you've proven over time that your system has a statistical edge. Then if you could execute it and detach your emotions from it, then I think that would be ideal.
Yep.
Right? That would be ideal because you're trusting the system. But if you do not have a system and yet you have emotional detachment from your capital, you're not even scared of losing it.
Yeah.
I think it's a very bad combination.
Yep. It's either you're detached from it because you can't touch that amount of cash, or you're detached from it because you understand that the P&L doesn't matter, the strategy matters. There's a fine line between these two scenarios, and it really shows you just how much you really need. That's why we talk about risk management so much on this channel. People on this channel always talk about risk management, even from our traders, the successful ones, they all talk about risk management because that's what's going to keep you alive in the long run. It's not your, your edge performing last month, this month. No, it's the lifeline that's keeping you alive. Yeah.
Yep. All right. So moving on to the next segment number 6. For the past week, I've been looking into switching from learning how to trade crypto to trading something with smoother but still volatile price action, which is Forex. Now I'm trying to trade multiple different pairs, asset classes, and time frames. This is like learning to learn 2 new languages while listening to a Charles Darwin audiobook and answering questions every chapter. It's just not possible. So for this reason, I need to tone it down. I need to cancel out the noise and focus on one strategy, one asset class, and one real goal. Giving myself a minimum of 3 months with these newly acquired skills to see what I'm made of. I need to stick with it, don't switch it up, don't try to learn something new, don't drag myself back into the fog. Writing this was the first step I made for myself to reach this goal.
Okay. So you branched out into Forex. Oh, I love Forex. Right. What do you think about trading just one asset class, or even just one pair?
I think it's okay. At least there seems to be some semblance of structure in place now, as compared to before. There are some goals here as well. Time-bound goals. I think he should not firstly constrain himself to just saying that, I give myself 3 months.
Yeah.
So why 3 months? Why 3 months? It's a continuous journey of self-improvement. If you're rushing in that 3 months to get results,
minimum of 3 months.
A minimum of 3 months.
Yeah.
I'm giving myself a minimum of 3 months. with these newly acquired skills?
He wants to review it at the
Okay.
end of
All right.
the minimum period. Yeah.
Okay, I think that he should not be looking at too many asset classes. He should just be looking at one or two pairs. And understand, of course, you did not talk about fundamentals as well, candlesticks and all that. What my own approach is, I like to find pairs that I can story tell.
Okay.
Like when you zoom out, see the bigger time frame, then you can sort of see what's going on.
Yep.
And you could see, for example, it did this, it did that, swept some liquidity here, this, that. So the bare minimum is I'm able to storytell what actually happened. So if you see some other pairs that just does not seem to make sense, then those would be something that I would filter out, right?
Yeah, like both approaches, they do work. I know people that make a lot of money trading just one pair, one time frame, one session a day. There are also some that trade multiple pairs, and they both work depending on the approach, right? Juggling multiple pairs means that some of them would be beneficial for their approach at certain times of the year, for example. But focusing on just one pair, one time frame, could also be good because it means you know that pair like the back of your hand, right?
Yep.
It's very easy to master it. It's a lot easier to master, not easy, but it's a lot easier to master.
Yeah. So once you actually filter to a pair that you like, you look at your own personality. If you're the type that cannot afford to wait, you're very trigger happy with your fingers, then it would be better to prevent problems. So it would be better that you don't scalp. You don't look at lower time frames because time frames have a lot of noise. So you should be looking at higher time frames. So higher time frames and look for a pair that you can storytell. I mean that's my opinion.
Yep.
And then what you should do then is to backtest. Backtest. Spend a lot of your time backtesting and see whether your strategy can play out or not. And if you can do it for one pair and just minimize it to just a few time frames, at least your backtest would yield results faster as opposed to like having 10 different pairs to backtest and multiple time frames. So you just multiply that. So it's very hard to get anywhere.
Yeah, as
and
a
learn
beginner,
fast,
yeah,
right?
you're right. As a beginner, you probably should look into that to just because it's hard to know what to focus on. So just choose something to focus on and stick with that for some time.
Yes.
See how it performs.
Just have to stick to it. All right. Okay. Let's move on to the next segment.
It's the last segment.
This is the last one. Oh, this is the last segment. Okay. Other key info that I didn't just copy trade within all this time. I spent a lot of time learning. Okay, good. Watching the whole TJR bootcamp playlist, understanding basic ICT concepts, understanding basic price action, and being able to make educated predictions for the market and react accordingly. I can trade but inconsistently, and I can understand a conversation within the topic. What I'm really looking for is guidance from here, a few pointers in the right direction so I can get a little bit further climbing up this mountain. The other hard thing is everyone has something different to say.
Okay.
Absolutely, everyone has something different to say, and if you know that everyone has something different to say, why are you posting in Reddit?
That's a good question. That is a good question.
Right? I mean,
but I guess it kind of comes into the fact that he maybe doesn't have anyone to talk to in real life, right?
That's it. But then again, it's double-edged sword.
Yep.
At this moment, since you're already following, you have identified people that you like, maybe like TJR, his bootcamp playlist, and all that. Then you would just spend time alone and try to make it happen with what you already have learned. And that's it. And don't need to do much more than that.
Yep.
You don't need other chefs coming in and telling you how to cook your soup. You already have it. You have the recipe already. Just execute.
There's no holy grail.
There's no holy grail.
Just like how there's no best meal on earth, right? You could have your favorite meal, right?
Yeah.
But there's no one size fits all for everyone. There's no one way to approach things. As long as you find something that you personally agree with and you think you're making improvements on, and you can track those improvements by your P&L, how many times did you follow your plan in a week, in a day, then those things are gonna add up, right? It's gonna carry over to the future. So I think if you had to just give him like guidance or pointers in a one line, how would you?
It's just okay. So definitely for me, it's just start it's the basics of every trader's journey, which is just start creating your system through back testing, lots of time back testing and journaling.
Yep.
And just from there, then you establish a baseline. I mean, you establish a baseline where you're at that you can then work upon. Yeah. Otherwise, you won't know why you're losing trades, or you won't be able to identify bad behaviors. You won't be able to identify whether you're always counter trend or pro trend. You wouldn't know which trend actually you're profitable in, or which pair you're profitable in. You know, so all this you need to start journaling and start back testing.
Yeah. Everything he said, just risk small, right? If you risk small enough,
Small, please.
risk small enough,
Or
you
risk
could-
none.
Yes, you could
Risk
also
small,
risk,
risk none.
right?
Right? You don't have to burn yourself out too much. Yeah, build a solid foundation first. So, yeah, I think that's it. Nothing much more to add. Right?
Yep, I think that's pretty much it. That's
All right. So, till next time. Done. Please.